Yeah, okay, mate. Let's have a look here. The potential of XVG running. Yeah, it is a very nice chart, to be fair. And they're coming possibly 10x on ASTER. Which do you think is the best spot potential? Well, I mean, that does depend. Go without saying, the ASTER should be the safer trade in the fact that it is a larger coin fundamentally. It potentially has all these narratives and it's backed by CZ and all that sort of stuff. It's got a coming L1 narrative. They're going to launch their own blockchain. So who are probably going to launch a lot of coins on there and different things. So you would think that ASTER is the better coin. Now the thing is, though, there is something setting up here that could potentially give quicker gains in XVG. That's the thing. The kind of beautiful thing here is that if this does start to dip down and dip back down into the yellow 9 EMA or something here, that area down there would be a very, very nice area, because in theory price should start holding in there. Well, it dips into here, look like good areas, but ideally if it's strong and if it's going to run and break out now, the dips into the yellow 9 would likely hold if this is going to be bullish. And then this could run and do, what is that, up to new highs there. I mean, to the highs there is 200%. So it'll probably take a lot longer for ASTER to do 200%. This has a chance of running and doing 200% quicker than ASTER. But the problem is, if you lock your money up on this, you may end up missing good entries in ASTER. So it's probably important to play it pretty well. I actually have ASTER. I have it here. I probably should have made this in a bigger window. I actually shorted ASTER today. I should have posted in the group. I was on the phone. I seen it. I actually seen a 10 on the topping candle, and I just started to short it here. I actually just seen this here, and it was like that, and I just started to short it, and then I added more here. I really should have posted in the group, but the fact that it already dropped, and I was like, oh, if it bounces back up here, I'll alert for a short, and it just never give the bounce back, and then it kind of drops. So that was kind of annoying. I would have liked to alerted. It's whatever it is. It's yes, 3% drop so far. But the better. Most people don't care when I put out shorts. Anyway, I don't think too many people short. Of course, some people do the odd time, but I think more people are more interested in buying the dip down in here. If this is going to dip down and take liquidity, that looks like the better option for most people to be looking to buy, or at least start to average in here. As you can see, that's back to the dollar, somewhere around there. If we can get down there, that's when it would get more interesting. Now, you wouldn't be buying a full position down there. You just maybe buy some. I know I bought a bit of a position up here on that pump. I don't know where it was in this candle here in this body, but I'll add if it drops. I don't know yet where. I'll just have to watch and see. This area looks like a good area. The concern is that all of these wicks, because there's so many wicks here, why is the price not bounced yet? So we want to see it act fairly strong in theory, because it is a bullish monthly stop hunt, but we do want to see it quickly down and back up and show strength to try and move. As a potential first time buy point. And obviously if somehow that fails, well, we need to watch for other buy points to be averaging into, because eventually this should do a 10x, and it might be way more than 10x if you can average down. It could be 10x from here, because the 2 billion up to 20 billion seems pretty okay for this. And the truth is that some of these coins, I think it was like Uni and different things, ran and done it up to 60 billion in the bull market in 2021, and maybe even more than 60 billion, some of them. But so that could be a 30x gain for ASTER if it done something similar. Now, if ASTER dropped 50% down here, down to 50 cent or something, when you got your average down there, as an example, well, could you be talking then about it doing 60x or 50x or something? You could potentially be making life-changing money on it if it really somehow gave that opportunity, which would be fantastic. So I'm not opposed. I don't really care if this dropped. If this dropped 50, 60, 70% now, I would be happy to continue to accumulate. I don't think it would bother me too much. But you don't want to. The problem is, if you've just say you've got 10 grand to accumulate or 100 grand to accumulate, whatever it is, you don't want to be putting all of it too soon. Like if you have half here and half here, your average is here. What if it does drop to 40 cent or something, or 20 cent if we had a real bear market, and you could have accumulated here and then made 100x on the way back up? So you don't want to put all your eggs in too early. That's kind of the tricky part. What if Bitcoin? What if we did have a year's bear market? I mean, I think 2026 is looking pretty good, and Trump's printing. I don't think that's going to happen. But Bitcoin has a very, very bearish 6-month candle and stuff like that. I'm just saying, you never know how it's going to play out, no matter what you think you know. So, I mean, if an average down here is at 80 cent, that's still relatively good. But what if it did drop to 50 cents? You could be making multiples return higher. So I'm just saying, it's good to have some dry powder if it ever does drop. Get that average down as low as possible, because this is sitting at 2 billion, and other coins like Uni, which is a similar DEX type of thing, went to 60 billion. Now, sorry, I'm wrong about that. Uni went to 20 billion. Other coins went higher, and maybe went to the 50, 60 billion. AVAX went to 30 billion. I think it was DOT that actually went to 50 billion market cap. So you can see that some of them have done and performed fairly well. So it is important. I mean, there's between 20 and 50 billion. So that could be between a 10 and 25x or whatever, depending on how well it performs, if it does something similar. Now, so longer term, fundamentally, in theory, this is a safer one to continue to accumulate, right? And then, wait for that run. The thing about here is, just say you had $10,000 in here. If you put $10,000 in here, you might turn it into 30,000, and then rotate it into ASTER, and potentially have more money in ASTER for the run when it happens. I mean, that's a gamble. That's there's risk in that. You need to, everybody needs to figure out their own risk in what they're trying to achieve, and everybody wants to make as much money as possible, but you want to do it as safely as possible. Are you going to miss the bottom in ASTER to be buying this and then buy into it? We don't know. The thing, what I said today in the video, is that this is still deep red on the year, and this might need a new year, right? It's hard to say. Sometimes they will pump, but there's 6 weeks left, 7 weeks left. Is this going to stay red for the next 7 weeks and then pump on a new year? I'm not sure, but what I will say is, though, that I do like dips. If we get one more flush down in these moving averages, I do like it. Like it looks really good. But the white 100 moving average needs to hold. If the white 100 moving average breaks, yeah, it's time to get out of this. This is looking strong now because it's coming into the top of the moving averages. It said, you can see here it moved up and it failed. It moved up here and failed. It moved up here, dropped, and came right back up. There's a sign of strength here that's trying to do something. If this was the 1st of January, I would be saying maybe just buy this, because it could move quicker. But the fact is, it's 6 weeks away, which leaves me a little bit apprehensive in what to do. If this does dip back, I would definitely consider buying some of this myself. Just a little flush back into these moving averages. Then I want to see something on there to see if it's holding, and look to get long on this to move up. Obviously, personally, I've started to buy ASTER already. not a great entry. I bought in. I kind of did FOMO. Well, I didn't FOMO. I had hoped that the volume would be sustainable. There was method behind my madness, but obviously it didn't play out. That volume was not sustainable, and it dropped away. If we just go to the daily, I think it was the daily. Where was the volume on that? Well, the volume was here on the daily, and then it dropped away. But I think it was the hourly or something as well. Yeah, look at this. And the truth is, I was stupid to continue to hold it. I even mentioned in the group that I didn't like the volume, what had happened in here, and I could have easily had time to sell it, because you don't want to see volume spikes like this. This volume spike is what cost me money by buying and holding. When I seen that volume, I should have got out again. But the problem is, I went to bed. I didn't like it, and then I went to bed and I woke up and it was down here somewhere or whatever. It had flushed, and I was like, oh well. My gut was kind of right that this was not good. You don't want to see volume spikes like this. You want to see sustainable volume, not these spikes. The spikes can cause dips, and then you want to be buying the dip on a spike to potentially move higher, because this could be more positive but a breakout volume. Just look at the spikes here. Big spike, drops back down, but later it comes back up. Drops back to a big spike, later comes back down, and then later comes back up. Big spike, drops back down, and later hopefully come back up, and this volume is just starting to rise. Maybe it may be best to kind of spread, buy someone here and maybe have a little position in ASTR, especially if we dip down into the weekly wick on ASTR. Maybe go 50-50 or 50-50 of your first allocation or something. And if it drops down in here, maybe just could nibble into ASTR a bit, and then if it drops down here, could nibble into this a bit and see what starts to perform. If this wasn't so deep red on the year, I would be more inclined to say this as well. But the fact it's deep red on the year makes me slightly concerned that it might not do anything until a new year. But anyway, mate, 12 minutes. It's not always an easy choice. The truth is, we don't have a crystal ball. If you want to play it safe, if you want to take risk, you would be buying some of this in here. If you want to play it safe, you would start accumulating ASTR. The ideal situation would be to buy into here, and this runs, and then you sell this, and ASTR hasn't moved yet, and then you continue. Then you rotate that into ASTR, and then you have more money for the larger bull run on ASTR. It depends how you want to play it and how much risk you want to take.